Hi stock investors, JJ here, welcome back. Well, Dan Ives thinks we're still in the early stages of a tech bull market. Today's being asked about cybersecurity companies' stocks. So let's see what he's got to say about that. What's going to happen? There is some reporting soon. Let's get into it.
On the NASDAQ 100. That company reports earnings right here on Overtime on Monday. But joining us now ahead of that is Dan Ives from Wedbush. Before I get to Palo Alto specifically, just got to ask about the rally we have seen in tech. It was the strongest sector today, and it's really been leading this turnaround, this rebound, after we did see a pullback in the S&P and a correction in the NASDAQ.
Significant pullback, and now it's rocketed again. Some of those tech stocks, the big techs did go down, but they're coming back.
Golden age for tech. I mean, in my opinion...
Before he gets into this, let's see how many catchphrases he uses in one go. He's already used one. First up, golden age for tech.
We are just in the early stages of a bull market. And if you look at what we've seen from AI revolution, just from broader tech, it's been strong from an earnings
AI revolution, ding.
perspective. And the growth scare that we saw, it's just a bump in the road to what
Bump in the road, growth scare.
I believe is really this fourth industrial revolution playing out. And that's how
Fourth industrial revolution. He's stringing together a catchphrase after catchphrase.
Handheld investors through this. This is the time to own tech, and I believe it's really just the start. Still 9 p.m. in an AI party that we believe goes to 4 a.m.
Ding, ding. He said that many times. That's one of his favorite things at the moment. We're in a party, tech bull run. We're 9 a.m. in the party, and it's going to go to 4 a.m. He's talked about this. Others have talked about this too, about how really they see it as like the 1990s with AI, and it's going to be a bubble, really. That's what he's saying here. If we're still only 9 p.m. and it's going to 4 a.m. So he's super bullish. That's why he says we're in the early stages of a tech bull market. What do you think about that? Let me know in the comments.
We're in an election cycle. We're already starting to see some of the signs of cybersecurity issues and hacks as we do move closer to that November election day. On the flip side of that, we saw the debacle with CrowdStrike a couple of weeks ago as well. So how does that position us for cybersecurity earnings when we do have Palo Alto kicking them off on Monday?
Yeah, I actually think as a subsector, it's one of the strongest ones to own. And not just into year-end, but into early 2025. In terms of what we're seeing in more and more movements to the cloud, cyber is actually benefiting. Names like CyberArk, Checkpoint. I think Palo Alto, it's actually one of our top names the last few years. It's a table pounder in our opinion.
Table pounder for Palo Alto he's talking about there. Of course, we had that CrowdStrike debacle globally. We'll have a quick look at some of the metrics on these stocks they're talking about after he's talked about it to see what they look like right now. But cybersecurity, always strong, growing sector, huge. There are a number of players in it for sure, and probably more as we go along.
This is a name where I think glass half empty still on the street, but now they're going for platformization. And I think when the Cash and team are doing, they're going to gain more and more share. And even when you look at the CrowdStrike situation, a black eye for CrowdStrike, Palo Alto could benefit from that.
Do you expect to see that show up in the results we get next week?
Not in terms of what we see in terms of results, but I believe as we go into fiscal 25, this is just going to be another tailwind for them. You look at that free cash flow story. This is just what I believe is sort of the second inning of this game playing out for Palo Alto. They are going to be a share gainer. But you take a step back, when you look at Zscaler, Checkpoint, CyberArk, Palo Alto, this is really actually just the beginning of really the second, third stages, what I view as sort of this.
So then they've got the names on the screen there. If you're just listening to this, Palo Alto, CrowdStrike, Zscaler, and Fortinet. He's not mentioning Fortinet, but we'll have a look at that too. I see that Terry Smith, if you look at that book behind me, Terry Smith, Investing for Growth, Terry Smith's Fundsmith has bought into CrowdStrike lately. Not CrowdStrike, Fortinet. They've been buying in the last few quarters. The 13F filings have come out. So that's an interesting stock that he's not even mentioning here.
This AI revolution. Cybersecurity is going to be a big beneficiary there. So I think as a subsector, could be the best outperformer going into year end.
And something I think that gets overlooked sometimes, you and I have talked about it, is the growing government book of business for some of these cybersecurity names. I mean, you saw it, they're in a different piece of the AI software business, data analytics, Palantir, but you've seen it with Palantir recently as well. How meaningful is it to be seeing the federal government dole out more of these contracts?
I mean, and we've talked, the 202 area code, it is just a different mojo that we're seeing from a spending perspective. Look, Palo Alto, Messi of AI, you saw it.
Messi of AI.
Firsthand in terms of what they're doing. Government is now really more and more focused on AI, next generation technology. That's going to benefit not just Palantir, it's going to benefit Oracle, it's going to benefit a lot of the cybersecurity names like Zscaler, names like Palo Alto, and that is going to be for the September quarter important, especially in that fiscal year end.
Okay, so he talked about Palantir as well there in terms of AI and cybersecurity. We'll have a look at some of these stocks that he talked about here. I'm going to show you Fortinet as first up here. So this is the stock. So it's by the way, if you're getting value out of this episode so far, before we get into this, do remember to smash that like button to help the algorithm to spread it to more people. I'd really appreciate that. Thanks. It's a pretty new channel here. So market cap of 57 billion. Fortinet's pretty big. As I said, Terry Smith's Fundsmith's been buying this. Why might they have been doing that? We'll look at these profitability rankings here. We've got gross margin really high, 78. Operating margin pretty juicy at 26. All of these in the green here in terms of return on capital. ROCE, which is a favorite of mine, favorite of Terry Smith's, 40. That's so high. The average is around, say, for the S&P 500, around 15. So anything above that is high. But we go down here. You know, it's not cheap. Doesn't look cheap. P ratio of 44. But if we look at the share price here, it's taken a big jump lately. Look at that. And could that have been the CrowdStrike debacle, its competition? And if we move to Palo Alto here, a comparison, no, it's a $108 billion company at this point. There's still, you know, metrics in the greens. They're 74% gross margin. They're high gross margins for these types of tech companies. Operating margin 8, a lot lower. This is just for the trading 12 months. I'm not diving into this deeply, and it's not recommendations. I'm not giving stock tips here. It's just an indication of what we might want to dive into. I would definitely want to dive into Fortinet. That's especially because Terry Smith's Fundsmith has been buying that sort of hand over fist or for many quarters, so they're really keen on that. In this sector, ROCE 12, you see that? That's below average, and they're still okay, but you know, is it as good? And if we look at the value rank, the P ratio is 48, forward P ratio 95. These are not cheap stocks by any means, but can it be sustained? Dan Ives thinks we're in the early stages of a bull market. If it turns to euphoria, we've seen Nvidia get kind of like that. It's almost like valuations end up not mattering if it turns into a bubble. So CrowdStrike here, we've got. Well, it'll be interesting to see what happens after earnings. Of course, we took that big dive down there in price. You see that. Year to date, it's still up 6.34%. But if we look at the gross margins again in the 70s, operating margin way low there, and return on capital there are pretty low there just for that last quarter. I don't know if it's been if we've got some skewed numbers here because of recent times, but P ratio 495. Okay, and that's saying, well, is it undervalued? That's a question. And he said that Palo Alto was a table pounder. And the other one that he mentioned there is Palantir, of course. Now, it's a favorite on YouTube, of course, with lots of investors. If we look at the profitability rank, it is getting better. 81.39 gross margin, operating margin 11, so relatively low. And the returns on capital, ROCE still low, but some of those aren't looking too bad. But should they be higher in this kind of industry? And PE is getting up there. Look at that, all red. So you could say that it's getting into expensive territory. As I said, not investment advice at all. You have to do your own work on this, but it's been climbing up year to date, 93%. But as I said, it's a favorite of especially retail investors. There's a community out there on YouTube who really love this stock and will kind of buy it at any price, I think. But Dan Ives thinks it's got a long way to go. What do you think? Is it in your portfolio? Any of these stocks in your portfolio? Speaking of portfolio, I want to tell you about ShareSite. I've partnered with ShareSite to give my community, my viewers, a special offer here. If you go to the link in the description to the landing page, you can see all about it. If you have different brokers, you can bring those trades that you have into the portfolio and track it to get the true performance of your portfolio over time. If you go here and look at this video, short video, tell you a little bit about it. And it's something that I use myself. I wouldn't recommend something that I don't use myself. I think it's very good. So I'll just leave you with that. And thanks for watching. And I'll put a link on screen to what YouTube thinks that you should watch next. It's pretty good, isn't it? The algorithm at choosing, and also a subscription link. If you subscribe to this, if you want to follow along on this kind of content in the future. Thanks for watching, and I'll see you in the next one.